S&P 500, the Nasdaq 100. Before I go into that, little quick update on me. The videos, I'm trying to push them out. I'm trying. Okay, look. We're still at the in-laws, obviously. As you can see here, it's a new room every day. And then number two, we're like this close. We should be in the house by hopefully tomorrow, Wednesday. No video tomorrow to let you know. But the question is, like, do we get internet set up? It's a whole thing, okay? Allie also is like at the breaking point of giving birth, but we don't want her to while we're not in the house, so it's like a catch-22. So that's where we're at now. And I am safe at the in-laws. Don't worry, I'm not locked up. But we're gonna get to it. So few things. Question: has the bottom developed and what's happening right now? Now going into tomorrow, what do we need to know? You have PPI and you have CPI tomorrow. Those are going to be the big determining factors on if we continue in this overall trend or if we can kind of break back to the upside. I do think inflation's in a very good area. The other part of this though is now we have Israel-Iran conflict. It's just like all over, like no one knows what they're going to do. It's like Donald Trump on Twitter. We just don't know what's going to get said. It's kind of entertaining, but like what's going to happen? Like Israel, Iran, are they actually going to do something, or is it a game of chicken? That's where we're at right now. Okay, a little bit further than that, though. I think PPI and CPI are positioned to do well. Why? Unemployment continues to spike. That is overall what the Fed wanted to happen, even though they're kind of say they don't want it to happen now. That's what's happening there. You're seeing consumers spending less, obviously, and you saw oil dip back down. Now, the oil dip won't be priced into the CPI and PPI report, but I have to assume based on the last report that we're not going to see too big of an impact from the previous rising oil prices. So those are things that we're looking at as well. On top of that, mortgages rates are also dropping. This should also be hurting the lease prices or rental prices as well, further dropping down the rent inflation data. So these are good things in the short term. Like, these are things that we want to happen. So let's get to the charts. Let's jump into it. If you have questions, comment down below. We're looking at Nasdaq, and you're kind of breaking back out of this. I want to talk about a few things because I actually think that Nasdaq is not really the signal right here for the breakout. I think Nasdaq is ready to break back out, and I think we're seeing momentum kind of come back into tech stocks specifically. I think today was a really good sign of that. But I think that ES and Dow are painting a bigger and better picture here, okay? So that's where things really get interesting. We'll come back to Dow, but Dow so far holding above 18,500, 18,500 right here. You can see we developed a little bit of a support here, an order block, buyer stepping in. Those are things that we wanted to see, okay? So that is important. That is a good sign to see. You can also see buyers are showing up stronger than they were down here, almost as strong as when we hadn't made that bottom down there locally. So this is what we want to see. Now, when I go over to ES, S&P futures, I think you get a better visual of what's happening here, okay? So really quick, I don't mention the 200 SMA and I don't mention the 100 SMA often, but I think it's very important here because of where we're at here, right? I think the 200 is obviously more important at 99% of the time. But you can see that we're holding the 200 clearly on the ES, and I've made this really clear. But you're holding below the 100 daily SMA as well here, signaled basically at 53.90, 53.92. We've rejected for a few days now. I don't find it coincidental that we're rejecting as we're going into PPI and CPI because, again, you're waiting on that inflation data, something to really bolster and get us back out of this zone. And, although Nasdaq isn't really, it's hard to say. I mean, you're clearly ranging almost like a flag, but it's really clear here on ES that you're just sitting in a clear range, right? Like you're just you're pinched between the 100 and the 200. It's that simple. We go to Dow, very similar thing here as well, operating in that box also, right? But the key note here is with good data, with any type of influx of buying, it's probably going to push you out of this range, pushing, you have 500 points of upside, in my opinion, like 40,200, maybe back into 40,700. You have a lot of room, maybe just 40,000 flat. That's still, roughly 500-600 points from where we're at now. So things to be thinking about of how we're moving here. So what I'm viewing right now. Now going into SPY and Qs, give me a little bit of a visual here. You can actually see that SPY is already getting back above its 100. So also worth mentioning, breaking above that previous little supply zone as well, right? Very, very important to realize where you're breaking up, breaking over that, invalidating it, pushing back over. Those are things you wanted to see. Okay, so all in all, decent action, just trending sideways. QQQ, looking pretty good, getting it back above your 449, 450 almost level, breaking back up. That's what you want to see, holding your 200. These are the signs that you wanted to see. Getting above its 100 would be better. But again, that's why I'm really eyeing ES specifically, because I think ES is the bigger signal here. ES breaks out. I think Nasdaq follows suit. I think Nasdaq has already shown you today that buyers are starting to show the excitement there, right? We look at names like Apple, really good move on the day. Even through the dip, we had a few dips on the day. Apple still held up, pushed almost into 220. Meta. Not a lot of people are talking about Meta. Facebook here, pushing back above 514. The last time we broke above 514, you ran into 540 in the same day. Okay, very strong name. Netflix, bouncing really well. Probably one of my top names on my list right now, holding above it. It's 100, mounting it all on the day. This could easily push back in all-time highs. Just telling you, you get that $700 push. Okay, Amazon. Right, we just talked about the news on the last video, right? I think Amazon, also an interesting name here. You saw buyers hold you up on the day. Again, you start getting above the 200 SMA here on Amazon, you're filling the gap quick into 178, 180. Think about that. Now on the, NVIDIA, okay, the list goes on, holding up really well on the day. I think AMD is a pretty big name down here as well. We're going to talk about that here in a second, but there's a lot of names. Now there's also some weaker names, like AMD is a weaker name, has been holding down. Tesla's been selling off, right? So those are names that kind of are concerning. But I still think across the board, there's a lot of, like, you might remember the word, value when we look at the market. So those are things to think about. Now, going into some more of the fundamental views, DXY. Despite some of the concerns about selling, people saying DXY looks good, looks that. Well, DXY, I wouldn't say DXY looks great. I wouldn't say that. Okay, we go to the daily higher time frames. It doesn't look good. You push down to our local low that we had back here, previous lows March 6th. You bounce a little bit. You don't, look back here. Look at the reaction they had. Does that look like buying to you? Not necessarily to me either. Okay, so that's what I'm looking at there. So DXY and the dollar still looks weak. Well, what about yields, a 30-year yield? I would argue the same case. You come back down to our 4% level, which again, we know if we get below 4%, Tyler Wilson is very bullish. You come back up, you bounce, you reject off of previous lows here, 4.33, you push back down. Now, is this confirmed for the break below 4%? Not yet. But what I will say is that these are the signs of what you want to see here. And that's what gets me excited. The 10-year yield is one of your big ones here. Similar action here, right? Coming back down previous lows, boom, back down. That's what you want to see. Now, again, the other area of the market that we've been talking about too, again, just so you have PPI, we look at the data, you have that coming in, so make sure you're paying attention. That's tomorrow morning, an hour before market open. That will dictate probably a lot of the movement as well. We also saw mortgage rates, okay? I've been very clear about what's happening here on mortgage rates, right? And again, the mortgage rates are still looking decent, coming down, okay? Made a lower high here. I'm not charting it like a chart, but all in all, you're still clearly in the downtrend on mortgage rates, which should benefit what's happening with rent prices. So again, another area to be thinking about of what's really taking place broad markets here. And those are the things that I'm watching for, okay? Really quick though, guys, I do want to say a few things. If you guys are interested, I haven't been posting as much on Twitter and social. I've been trying. It's just I've been so busy. You guys don't understand. But like I said in the beginning of the video, I've been swamped. I'm trying just to get back to life as normal. And we also have a baby coming out. So who knows what's going to happen and change then. But the Twitter, the link is down below. Make sure you check us out. I'm trying to post updates when I see fit there. But also, too, here on Moomoo, again, I'm going to go over some options that I'm liking here. But this is the broker that I use for everything, guys, when it comes to trading, options, stocks. They have your news. They have your screeners. This is actually the new platform as well. You guys are more familiar with the older platform I've been using. This is the new one that they've been kind of testing out. I'm a huge fan. They have your news, your screeners, everything in between that you can imagine you need is here for charting as well. You've seen, Morgan Stanley, you've seen E-Trade, you've seen TOS, you've seen all these platforms go down. Moomoo has not gone down during this entire past few weeks. So something to think about. The link is down below. Support the channel as well. Now, a few things here when we jump back in the market. We're going to go strictly into equities. I'll get you out of here quick now. A few things though. Bitcoin back below the 200 SMA, rejecting 62K, came back down. Get back above that, you look good above 62.5K. Until then, not touching it with the 10-foot pole. Okay, equities we like. Now I'm gonna actually get a little bit crazy here. Some mid. I'm gonna go some mid and small caps, and I'll go into larger equities I like. I mentioned this one in Discord a few days ago. Robinhood. I think it's one of the best plays out there right now. You guys know I played it earlier in the year. I still have some of those 2026 calls, but I did take a lot of profits. But again, I've been reloading a lot of that position and even getting shorter dated positions. Okay, so Robinhood, you reported earnings back here from $17, kind of slowly pushing back up. A lot of illiquidity in between basically $18.6 and $20. I like it a lot. First target is at 19.25. I think it's a great name out there. Looking at options overall, give you guys a viewpoint. I like the October 18th. They're pretty cheap. The $20 ones. You can go shorter dated as well, something like the $20 here as well, or even the $19 for September. Another good position that I like a lot there, so take it for as it is, or what it is. You can go more dated if you want to actually hold those $20 ones as well. But again, I love Robinhood. I think it's a really good company. I think what they're doing as well financially and with their numbers prove that this is a decent looking play in the longer term as well as the shorter term. Good, interesting name there. CAVA is another big one here. We're talking to Don about it today, and one of the friends we have here in Option Drops. CAVA's been looking good. You held the 100 daily moving average, pop back up. You have earnings coming up. Most comparable name for CAVA for me is something like Chipotle. Personal opinion. I like what they're doing, and I think these earnings, if they prove as good as they have been in the past, could really prop and position this thing to get back above 200 or get above $100 and really get going. So make sure you're paying attention to that as well. Another name I've been talking a lot about too is Upstart. You push to all of our levels so far. You get below $34, you can't really do much, but I'm waiting for this thing to get back above 36 or show some signs of life, because again, their earnings were good, showed room and areas for growth. So I still like Upstart a lot, but again, kind of cooling off now as you hit $38, $39. But yeah, so again, looking at a few of those options as well. Again, we're going to go into CAVA first. As we look at CAVA, again, especially mid caps, guys, I don't see why people don't like dated positions. That's my opinion here. They just position you and give you a lot more wiggle room for failure. That's the name of the game, is control your risk, control how much you can lose, and lose the least amount possible. And I think that time here is your best friend. So CAVA, I'd at least be going for January. But if the market really does well and starts bouncing back, I think, you have a lot more room to make money here. And I think this thing can get well above $100. Personal opinion there. The next one up too, I mentioned, was Upstart. This is a trickier name just because you got more volatility lately, so the options are priced kind of funky. But what I will say is I like at least January, okay? Like the 40s personally. You can go something closer dated, but you got to wait for your key levels to break and mount. The levels were just previously mentioned, so make sure you just take a picture, screenshot those if you need to, okay? Now, other equities I'm liking and been talking about. I think the ship has kind of sailed here on NVIDIA. You can go dated contracts if you want. I think this was probably the best overall position you could have got, though, in the grand scheme of things. With everything going on, they do have earnings this week, so be careful. I'm not looking to trade them right now. Actually, they have report earnings next Wednesday. Sorry, not this week, next week. Okay, so I like NVIDIA a lot. I think they're going to do well. Grand scheme of things, very happy there. Another name I mentioned was AMD. I think you need to be careful here on AMD because you're still below your 200 SMA. But they did just close the acquisition of Silo AI, the EU's biggest AI lab, just to let you know. So that's very big as well. Now, I don't think this is going to bring in revenue immediately. So don't assume that. Don't assume it's going to have an immediate impact. But I think AMD is taking the steps in the right direction during this time. Things that we wanted to see these companies do, really the past 2 years, at least they're getting in the driver's seat now. Do like that. Apple as well. Apple's been moving back into 220. You hit it today, as I mentioned. Back above 220, you're looking for, back into 222. You get back above 222, you're probably pushing back into 226 and higher. There's a lot of hype here behind Apple right now. They're finally back in that position of generating revenue, right? Really growing back in India and China, those markets that were hit previously. So I still like Apple a lot. You did get the 220 test, so I'd be really patient here now. But I do think with good PPI, good CPI, I think dated positions here are really, really nice. Now, I do want to say something for you guys, right? Let's say hypothetically you're looking at Apple, okay? You're like, Tyler's saying, these dated positions. Why is he mentioning dated positions, right? Why? Okay? And people, they look at the price tag of a 230, right, for January, or we can go more dated, right? I think like 2026s are really like awesome. I think grabbing a 2026 contract now really positions yourself and sets you up for a great opportunity, okay? If things go like we kind of anticipate, okay? Like a 2030 or a 2015, whatever you're grabbing, right? You look at this like $3,000 a contract. That's a lot of money, and I agree, okay? But the way that I look at this is leveraging my leverage stock in a way, right? So let's say I have $10,000 to my name, but I don't want to buy $10,000 worth of Apple and overexpose myself to that, but I still like them. Well, I can stick, a third of what I have and to really get those gain potentials, right? So if I buy, $10,000 worth of Apple, it's got to move up 30%, quick, simple math. This thing has to move back and, 30% for me to make my $3,000 return. Whereas on the other side of this, if you buy a 215 in the money contract, this thing has to move, you move $30 here and you're up about, give or take 80%. I'm not saying that you're going to make 80% or anything like that, but that's how I think about these positions. And when I'm trying to invest in them is the difference between in the money, out of the money, and how I'm leveraging my position and trying to make the most out of our portfolio, especially for smaller account traders, right? Things to be thinking about, right? Now I get it. You can't buy a, a Meta in the money contract for 2026. You might spend $10,000, but just how I'm going about this. And I think NVIDIA was the best company out there to really think of this viewpoint because it moves so good. Their earnings have been so great, my personal opinion. So what I'm looking at there, overall broad markets. If you have questions, guys, comment down below. I'd love to answer them. Things will go back to normal really soon. Last thing I'll mention, someone requested was Tesla the other day. I haven't gone over in a minute, but Tesla's been on the down path. Obviously, you're below your 200 daily moving average. That's disgusting. Looks weak. And it looks like you want to get below your 100 daily moving average. It gets below that, I think it's a sell-off most likely. I do think Tesla will become a buying opportunity if Trump does get elected. I think it would be a very big buying opportunity, but we're just not there right now. So for the fundamental viewpoint right now, I just don't see the opportunity. That's just for me. The technical viewpoint, the same stance. If you have questions, comment down below. I'll see you guys tomorrow. The links, if you guys want to support the channel, are there as well. Have a good one, traders.